Welcome to another episode of the Future's Edge podcast. I'm Jim Uriel. The caffeine's starting to kick in. This should be a fun one. My producer and old friend, Bob Iacchino, who's also co-host of the show, has had knack for just getting the best guests, and he's done it again. We have Carol Roth, author of War on Small Business, which in the old days when you actually had a hardcover book, I'd like hold it up and show the book, but I have it on my iPad. It's a fantastic book. She's a recovering investment banker. She has perfect hair and she's a troublemaker. Carol, welcome to the show.
Well, thank you for that illustrious introduction, and a pleasure to be with you.
So I don't know if you did see the last email, but because you and I are two people who have perfect hair, we're just going to make this show all about hair care tips for our fans, because I don't think it's fair. Mine is olive oil. That's why I eat a lot of it. I rub it on my skin. Forget it. We'll come back to hair tips.
Okay, fair enough. We'll end with it. We want people to stick around for the whole podcast. So that's the teaser. So you have to stay till the end.
But we do have to establish credibility. This is an important part of the show. So over the last, let's say 2.5 years, what's the best TV show you watched? Series?
Oh my God, we've watched so many of them. Very, very into Fauda, which the next season is coming out soon.
What's it called?
Fauda? You don't know Fauda?
I don't. See, I'm.
Oh, geez. Okay, so Fauda is a show that came out of Israel that was picked up by Netflix. That basically is sort of the Israeli Special Defense Forces going after Palestinian and other types of terrorists, but showing like from a real human perspective, both sides of the story, which is phenomenal. And it's literally like an action movie in every single episode. Like you're on edge. Like most dramas, it takes maybe 2 or so to get into, but that was one that we picked up. And then we just watched on Apple Severance. Have you guys seen Severance?
No, I haven't seen that one either.
Oh okay. What are you guys? Credibility? What kind of credibility? You don't know about it. So basically,
I didn't say I was establishing your credibility. I established my own, and apparently
that failed miserably. No, so Severance, great cast: Christopher Walken, Patricia Arquette, Adam Scott, produced by Ben Stiller, and many of the episodes
exactly
are directed.
What it is now.
Yeah, okay. Many of the episodes directed. So basically, it's these people who've agreed to have their brains split apart so that at work, you only have work memories and can't remember the rest of your life. And at home, you don't know what happened at work. And there's a whole thing about it. And boy, that was wild. So wild in a sort of like a 1984 Brave New World kind of thriller sort of way.
My wife won't watch anything. My wife won't watch anything that's like, New World, like sci-fi in any way. She hates that stuff. So I'm gonna have to watch that on my own. But
it's not really it's not really sci-fi. It's not like outer spacey. It's like thriller. You know what I mean? It's like, kind
cool.
of, yeah, it's really good, but definitely. So if you need more recommendations, I mean, I got like a whole slew of them, but those two, Fauda, you got many seasons, and the next one's coming out. And by the way, if you're a big fan of dramas, I'm assuming you've all seen Peaky Fucking Blinders, and that's also coming back. So like we've got a lot of good stuff ahead.
I couldn't keep up with Peaky Blinders because I had to have the closed caption on. So I'd read it and then rewind to look at what happened, and then read it and then rewind to look at what happened. I got exhausted.
So here's okay. So you have to have the captions, but this is my philosophy. I have the captions on for everything. Like regular like game shows, I'm watching Family Feud, the captions are going by because I can't understand what people say unless I have the captions on. So you get used to it. And so if you keep it on for everything, then when you go to watch Peaky Blinders, and by the way, I also recommend for Fauda, they do dubbing and captions. I prefer having in that particular one, the English version. But you can also do the Israeli Hebrew version with captions. So lots of options.
Okay, thank you guys for joining us on the Future podcast. We'll see you all. No, we have more stuff to cover. So as we're talking right now, the stock market is just absolutely getting pounded. It seemed like yesterday when Powell came out with the comments, and I personally think the moment he said Volcker, Paul Volcker brings back bad memories for inflation fighting. I think they've made it clear that they plan on fighting inflation with whatever it takes. Do you agree on that? What do you think is going to happen? I think they're going to do this until something breaks, or what's your thought?
I mean, this is like trying to get inside the minds of idiots, which is not the easiest thing to do. Certainly, I'm no fan of the Fed. I feel like they never should have gotten involved with the policy that they've had going on for so long. Certainly, once June of 2020 hits and there were all-time highs in the stock market, despite what was going on in the economy, it would have been the appropriate time for them to go, okay, we don't need to be here anymore. And so they're so far behind the curve, and so many things have gotten disrupted that I think we have a couple issues. One, obviously, anytime Powell speaks, the market tanks because he just doesn't know how to communicate and, frankly, may not even know what he's doing. But it's tough because we certainly shouldn't be having zero interest rate policy, and we shouldn't have a balance sheet that's standing at almost $9 trillion. But in terms of that, now all of a sudden panicking and trying to increase rates and shed balance sheet, in the manner that's, kind of herky jerky when we have all of these structural issues doesn't seem to make a lot of sense. And we have so many supply and demand imbalances, whether it's in the labor market, in the housing market, commodities, all different kinds of arenas, is that they may be able to affect the demand side of the equation, but they're not really going to affect the supply side. So it seems to me the only way that their quote unquote tools, impact, stop inflation is through a recession or just a stagflationary environment, which is not super positive. And to think that the people who led us into this didn't know inflation was coming, didn't know supply chain was going to get disrupted, didn't know the labor force was going to be a mess, somehow now all of a sudden are going to bring us in for a soft landing.
Sure.
I'm not buying that.
Yeah, and it's so funny when they talk about, we didn't, anticipate this happening. You could have asked me, you could have asked you could have asked Brian Westbury, people who, or 1,000 other people who were shouting it from the mountaintops. The last two guests we've had on this podcast are Sri Kumar, a very talented economist. I don't know if you know him, but he's great, and Cameron Dawson. And I failed to get them to articulate what I like to say about the Fed, the politically motivated half-wits. I'm not even going to ask you to say it because it would just be too much of a layup. But of course, they were buying mortgage-backed bonds into the teeth of a red-hot housing market. How long ago? A year ago? At least 8 months ago, right?
March.
Yeah. I mean, we saw exactly. The market was red hot, and they're still buying $40 billion a month of mortgage. This is amazing to me that we've seen what we have. Let's wind it back to inflation concerns of small business. Your book, War on Small Business, is fabulous. I'm a restaurant owner, Brant's Palatine, which to my knowledge you haven't been to, which is in your general vicinity. And I'm a little sore about that, but we'll talk about that later as well. So, we've seen costs go up 25%. Let's say 20 to 25%. We've seen labor costs go up. In my mind, the only real discussion is, are they doing this on purpose to try to squash small business, or is this just complete incompetence?
So, as I sort of laid out in the book, I kind of feel like it's a choose your own adventure. I think you could make the case, like if you were trying to crush small business, is there really anything that you would do differently? And the answer is pretty much no. This is the playbook you would follow. But there's also, just kind of structural and systemic incompetence and just, kind of the natural tilting of the playing field for political gain. I will contend that it kind of doesn't matter. It doesn't matter what the intention is, because the outcome of the structure that we have in place is always going to be the same. And when we give more power to central planning and sort of the elites and these connected entities, it's always going to tilt the playing field. It's always going to move us away from free markets and capitalism and decentralization to that centralized piece of the economy. So I try not to get tied up with people, because I think the merits of the argument of whether it's intentional or not doesn't matter, because we're going to end up with the same outcome. And, it stands in the way of economic freedom, which is really the issue for me. All the things that have been happening. We went through the last 2 years, the most historic transfer of wealth in history from Main Street to Wall Street. We are all paying for it very literally as well as figuratively right now. And, I think that if that doesn't, have a giant red neon sign going, something's got to change, I'm not really sure what does.
No, and again, we joked before we started rolling tape that Carol and I agree on just about everything. I do like to frame it as if if it's nefarious, if it's actually, because I just want to get the word out so badly. I
Yeah.
think people have trusted government, and I think that pendulum is swinging back the other way, which I love. They've shown us really no reason to trust them for such a long time. And here we are with people saying, wanting to give them more tax money, more power. The things like that is just amazing to me. Let's talk about stocks for a second. Like I said, the stock market was just getting pounded when I left the trading floor a half hour ago. Is the entirety of the story this first quarter into the second quarter, into the second quarter now? Are we just repricing against interest rates? Did we just come to Jesus moment where you can't have free money forever, and at some point in time you got to reconcile?
I think there are two things that are going on. I mean, certainly the interest rate story, and there was a thing back when we were all growing up in the markets called valuation that used to actually have some sort of semblance of meaning in the markets, and that was before the Fed came in and completely disrupted the idea of risk in the market. And so now, as interest rates kind of creep back up again, we actually have some mechanism for pricing. And as we all know, for those of us who did things like DCF models and weighted average cost of capital, that when capital is more expensive, that weighs on valuations. So I do think that's a piece of it. And then there's sort of this quality of earnings piece that I think is weighing, because, as you just said, in your restaurant, costs are going up, wages are going up, that is happening throughout different industries. There's no place to hide. There's nobody who's kind of saying, oh, well, I'm able to maintain these great margins in my business. Maybe there's a handful of businesses that have a wide moat that can pass them along and keep that. But I think there's going to be some real margin pressure. And, obviously we've got these balance sheets that are, stockpiled with cash. And so likely we'll continue to see buybacks. And so on an EPS basis, you may see earnings growth, but the quality of that is coming from, that return of capital to shareholders, not from the strengths of the business, which also in a world where valuation matters, theoretically should matter. So I think we're seeing a little bit of both of that. Just kind of my thoughts. I don't know. Do we agree on that, Jim?
No, we actually agree completely on that. Yeah, we're back on track.
Okay, all right, good.
So, but when you look at the equity markets over the next year, I think it sounds like what you're saying and what I'm saying is that below average returns potentially for years, unless the Fed pivots quickly. Is that kind of what you're saying, you think?
Well, first of all, let me answer the second part of that, because I do think the Fed will pivot. I am super cynical about sort of the whole political structure that includes monetary policy. And I think that, they're panicking right now and they're going to rush to raise. But the second they feel like they have cover, I think they're going to move back into their comfort zone, which is that, very accommodative policy. And they have the pressure to, because we all know what's going on with our national debt. We all know what that means in terms of interest service. If you go back to the CBO budget, and they were warning, by, whatever it was, 2029, interest expense is going to double in terms of the budget. At that point, they were projecting something like 2.5 on the 10-year, or maybe it was 2.1 on the 10-year by 2025 and 3 by 2029. And guess where we are today? So there's there's immense political pressure for them to go back to that policy. And I think they're going to take cover in that, particularly given the people who are on board. So I think that that's a piece. In terms of the returns, there's no doubt that it's just going to be an immense amount of volatility. I think the challenge is people are trying to figure out, what do I do? Like, where do I put my money? You can't keep it in cash because of inflation, and that's just going to erode the value. Housing and land is also going through the roof. So, where are you putting your money? So I think that in and of itself will maybe give a little bit of support to the markets, but it won't be an easy transition. And I think it's going to be all over the place. And I do think in terms of returns, we should not be expecting to see the same kinds of returns that we've seen in the past several years.
So just to put a finer point on what Carol just said about those CBO numbers that you said, I believe they estimated that 100 basis points or 1 full percentage point point rise in interest rates across the curve will cost the U.S. federal government close to $200 billion additional a year in debt service.
300 billion. 300 billion. Well,
okay.
you know that like over time, right? There's $30 trillion in debt. So,
Oh, yeah.
there you go.
So,
right.
Yeah. Oh, yeah, exactly. So that was probably 2 weeks ago.
Right. Exactly. Right.
Yeah. Now, yeah. So, okay. I remember back in August, I believe it was 2017, the Fed was talking about tightening. They talked about it. They may have even tightened once. And all of a sudden, the stock market corrected 8% in about 3 days. It was James Bullard or Bill Dudley, and you probably remember it better than I, but they came out. The only thing that had changed was an 8% knock in the stock market. And he comes out and he goes, the case for tightening has changed. Like, I don't think it has, pal. But so my question to you is going to be, it seems to me that they're fine with 8%. I think they're fine with 15%. I think there is a level where they flinch. And I think they have it in their head, whether they admit it to themselves or not. And I think it's between 20 and 25% in the broad market. Do you think that sounds reasonable?
Yeah, I mean, as I feel like there's pressure coming from two places. And I've always said the Fed, even though they have this dual mandate, actually has a secret dual mandate, which is to support the stock market and to support government spending. So I think given both of those issues being on the other side of, the raising of interest rates and the shedding of balance sheet and however they, kind of play that, I think that, it's kind of impossible to say like which tools they're going to screw around with, but I think at some point, like you said, they end up flinching and they end up actually, as we've seen them do before several times over the last couple of years, reversing course. So it's not even just like we're stopping this. I think they're going to actually move back in the other direction.
So one thing, I think a story that's being undercovered is the absolute collapse in the Japanese yen. For background to people who are watching, back in February, the Bank of Japan decided they were going to cap 10-year rates at 0.25%. So they've been just buying unlimited amounts of bonds. Well, guess what happened? The yen has been absolutely clobbered starting in the first week of March. When I look at this story, I'm having a difficult time interpreting it. Obviously, there's the interpretation if one of the major currencies on this planet is getting killed, it's disruptive of markets. Equities hate any sort of disruption, whatever it is. But is there, I hate to be the bright side guy here, but is there an element of the Federal Reserve looks at that, maybe even ECB looks at that and says, wow, central banking has some limitations. We should be a little more careful going forward. And is that maybe one of the reasons why we're seeing strong rhetoric from the Fed?
So one of the things that hasn't happened enough recently is the MMT people, the magic money tree, as I like to call them. We have not given
that. I wish I had made that up. That's fantastic because those people are toxic, man. But anyway, go on. Yeah.
Well, they have not received enough public ridicule. Like we've been hearing for years and years. Oh no, we own the printing press. We can just do whatever we want. I've got a checkbook. I can just write checks. Like, why not? So we have not like trotted them out in the public square, made fun of them, thrown tomatoes at them. Like, they just, most of the people kind of don't even realize what's existed. And I feel like they're all just kind of going, okay, we're not going to be a thing right now. And I feel like this is kind of, just another piece of, you can't do that forever. And I think people have always looked at Japan as sort of the excuse for what we can do. A really interesting piece of data that I picked up in the last couple of weeks from a book that was a little insane, but had lots of really good data, just bad conclusions, was that I didn't appreciate, and maybe you knew this already, but in terms of the crazy amount of debt that Japan's had, they took an enormous portion of that and actually invested it in financial assets. So it was something like when, debt to GDP was over 200%, it was like 85% of that was actually invested. And we all know debt for investing is very different than debt for expenses and government spending. So I think that's one of the reasons why people have been looking at that headline number of Japan and going, oh, well, we could get to that level, not realizing that that was not all on the back of spending. And that all just kind of set off a huge light bulb for me. So I think that apparently whatever, amount has now sort of crossed that threshold and that point of no return, it should be a giant wake up call. Unfortunately, the moral hazard that we have built into our political system, I think, is not necessarily going to allow us to learn the lessons because there's no accountability. Like these people who are making the decisions have no accountability and reap no, sort of issues other than the potential of losing their job when things go sideways. And so I'm not sure that they will learn the lesson, but Lord, they should.
Correct me if I'm wrong here, but the BOJ doesn't just own Japanese financial assets too. They own global financial assets too.
Right. Yeah. Yeah. That's what they did. They took the money and they, instead of just, like saying, oh, we have debt and we're going to monetize our debt, they actually issued debt so that they can go out and make investments, like you said, all across the world in financial assets. So a very different use case for debt, right?
Yeah, when you hear this stuff, you just want to build a bunker sometimes. Now, we were talking about MMT a second ago, and if Stephanie Kelton, who, by the way, I think is a very nice person, I've spoke to her, I just think she's wrong. I think the notion of MMT fails 100% because of two reasons. They're supposed to print all this money, issue debt, no big deal. But the second they see inflation, they raise taxes to drag liquidity out of the system. Well, that fails two ways. First of all, they haven't shown any proclivity to be able to identify inflation. They've missed it. Massive inflation in tech stocks, massive inflation in real estate. They got their head up their ass. I apologize for that. And no, I don't. They do.
No, you don't. No, you don't. You meant that exactly.
Secondly, the notion that they would have the backbone to like, oh, shoot, we see inflation, we immediately raise taxes, depending on where it is in an election cycle, is preposterous. They'd never do that. The only way to do it would be to elect politicians for life who would have the freedom to raise taxes and not worry about re-election. That doesn't sound very good to me either. But anyway, I'd love to have Stephanie Kelton on the show. Like I said, I think she's a good person. I think she's just dead ass wrong. I couldn't be any more wrong.
I think she's an incredibly damaging person. She may be, like nice. I can separate art from artists, but boy, her and her ilk, I feel like it's a grift personally. And I feel like, I'm not a big fan of the grifter, just kind of taking the racketeer, taking advantage of the useful idiots that are out there. So
couldn't have said, I'm glad you're here to say it that way, because I think that's perfect. So lately we talk about commodities for 1 second before we bring Bobby back on to do trades. Lately, everybody, all the big money managers saying, oh, well, now you got to have 20% of your long-term money in commodities. Commodities are the way to protect against inflation. Do you think going forward, we're going to see that from people, money managers? Is this a trend that's going to last? Are we in a super cycle for commodities?
So it's really hard to say what money managers will do, because there are all these external pressures, the ESG pressures of, where you should
we want to talk about ESG. I'm so glad you brought it up. Okay, good. Go on.
Yeah. So we can kind of lead into that, but there's so much of this, here's what you should do to be a good corporate citizen, directing the decisions instead of them being directed in sort of a fiduciary manner, which is, makes it much more difficult to predict. But in terms of my own portfolio and the way that I'm looking at the world, again, I feel like the story right now are these systemic supply demand imbalances. We're seeing in labor 1.8 jobs for every job seeker out there. You're seeing it in the housing market. We're underbuilt by like 4 to 5+ million homes. And that's before we turn back the spigot of legal immigration again, which will put pressure. And oh, by the way, you've got all these corporations flush with cash who are now competing with people for their homes, putting more buyers into the market. And I just feel like, based on some of the great research that I have been consuming lately, that we have such a supply demand imbalance on the commodity side. And so if you do even feel like there's going to be this continued decarbonization push, which, I tend to follow the money on that side, things like the electrical grid in this country, is a mess and needs major infrastructure upgrades. And all of these, whether it's electric vehicles or other sort of green things, have all of these commodities in there. So I know that, obviously we've seen a huge spike and it probably comes down, but I think in terms of the idea of this commodity super cycle, I think just from a basic supply demand scenario and where the push for capital is, it certainly seems like a very relevant thesis that I can see many money managers jumping on.
Okay, I'm going to ask you a question. It's going to be, is ESG a grift? But before I actually ask that question, I'm going to say, in the restaurant business, and this is a true story, it used to be that someone would come out and test our water. This is like when we first bought the restaurant 9-10 years ago. Now it has evolved to, we send a water, we pay money and send a water sample somewhere and they test it. They probably don't test it. My point, I guess, is that we're from Chicago. Any system that can be corrupted usually is corrupted. Back to the original question, is ESG just a massive grift?
So I had a very interesting event I attended last weekend with Alex Epstein and Peter Thiel, talking about fossil fuels and their use for human flourishing. And the way that Peter Thiel framed it was really interesting. He said that it sort of starts off with these kind of people who really believe something, and then as that sort of gets momentum, you get the useful idiots and the grifters involved with it. And so the fact that it has become such a thing is 100% a grift. It violates fiduciary duty. People, even the CIO of ESG at BlackRock quit because he's like, and he's a green guy, and he's like, this is not doing anything other than making Wall Street, wealthier. So I feel like now that you've got the consultant class and the lawyer class and the accountant class, they're like, oh, here's something else that we can bill on. It has just become this ridiculous sort of, racketeering kind of thing, without really looking at the potential damage. And just like, it took everybody losing significant buying power with inflation to wake up and go, oh yeah, it's probably not such a great idea to print all that kind of money and have all this kind of financial relief. I feel like the same thing's going to happen with ESG. I mean, we're literally very likely next year to see people in this world have massive food insecurity and starvation and lots of social disruption because we haven't had the ability to invest in the right types of natural fossil fuels and other energy to do things that kind of flow through the rest of the economy, like drying grains. Petroleum is used for drying grain, those kinds of things. It's all interconnected. You can't just do one little thing. And so I think it's going to take that level of horrible suffering, which could have been avoided, for people to wake up and go, maybe this isn't a good idea.
And you know what? Those same damn people go, they always kind of scratch their heads and go, oh, I didn't see that coming.
Who could have predicted this entirely predictable outcome, right? Once again.
Predicted this. Yeah, right. Bobby, can we bring you back on? So Carol, this is the part where we go into the trading.
Yes.
And using futures products. We are perfectly comfortable with being called a dumbass if you don't agree with our trades. We are going to ask you to weigh in on them. This is fun. It's kind of like the lightning round. Bobby, are you out there?
I'm here.
Oh, I thought maybe you took a break. So you heard all of what Carol said. So I know you wanted to talk about gasoline. We did not talk about crude as much. We talked about the commodity complex and different sort of things. First of all, what do you got for her? She's brilliant. Do you have any questions for her?
No, I actually want to know if you have any data, Carol, on how many single family homes private equity is kind of buying up, because the last data I saw was about 2.5%. Then I saw AOC is going after it, which made me think it just wasn't an issue at all.
Broken clock is right twice a day. So
yeah, so I don't know. I mean, it's been something I've been fighting with. I haven't been able to find good data on it. And I think one of the reasons that we're going to see inflation really hit, the Fed's going to rack up rates, but it might not be such an overall economic disaster, because I think home prices are going to stay firm because of the short supply. And how much do you think private equity is contributing to that, or is it just supply and supply chain?
Yeah, so I think, so if you go back, there's a really great chart that I pulled from Statista that shows kind of the building by decade of homes. And obviously we know, during the early aughts that we saw this like huge build, and they probably overbuild by, a few million homes. But what happened in the last decade is then they underbuilt by like something like 6 or 7 million homes. So we're walking in with this like 4 to 5 plus, million, depending on who you ask, kind of delta of homes that are underbuilt without, as I said, legal immigration. We have 2 million fewer legal immigrants, let alone all the illegal ones that are coming across the border right now, than was projected if we would have kept things on trajectory from 2019. So, there's a huge, demand side of the equation and supply side of the equation that are coming together. And then, like we said, you have these corporations. I can probably get some estimation. We've seen that, individual companies that have bought up so far anywhere from, 30,000 to 80,000 houses a piece. And that's continuing to grow. So I don't know sort of, on average what percentage they're playing in, but they certainly have plenty of capital. We know they're coming in with all cash offers. A lot of times they're not looking at the properties at all. They're just saying, okay, yeah, this is great, we don't care. And so it's making it very difficult. But like you said, in terms of kind of stabilizing the issue from an economic standpoint, it kind of then doesn't matter what mortgage rates do if you have a bunch of cash flush, all cash buyers. Right.
I'd love to see. I mean, if you can find data on
Yeah.
that, I'd love to see it. Maybe you can come back on and talk about it. What the last I saw was 2017. They owned about 2.5%.
Oh yeah,
of
it's
the
gone way up
single-family
from there.
home rental market, not even
Yeah.
the total of homes.
Yeah.
And because the value of homes has gone up and rents have gone up, they had to have made good money on the small batch in 2017. So I think they just have to be getting more into that business. They're not going to walk away from it.
No, I mean, it's accelerated significantly over the last couple of years. So
Right.
let me go back and see if I can do some digging. I
This-
feel like I always get homework. Every time I come on a podcast, I always end up or a media thing, I always end up with homework.
I doubt it's your last assignment.
But this is, I mean, I don't think we're giving it, this is nauseating to me that we allowed the BlackRocks of the world and the various other companies to get zero interest rate and buy up housing so other people had to chase it who actually need housing. Like, we're talking about it in numbers and stuff. This is the most bullshit thing I've ever seen, where people can't afford housing now because BlackRock owns it all. I mean,
And-
Like,
and-
given the
and-
stance that the three of us have, what do? Regulate it? I mean, I don't know how you stop a
No,
business.
okay. So for
That's why it bothers me, Carol. That's
Okay,
why I've been looking
so
into
let's go into the ESG piece, because ESG, the S, the social component, if you go and you read all of these financial companies' websites, they're like, oh, we want to make sure there's low-cost housing available for people, blah, blah, blah. Also, BlackRock, here's a bunch of money. Oh, this company, here's a bunch of money. Go buy single-family homes. So I feel like we need to drag these financial companies. I've written a couple articles, but we need to drag them publicly and say, if you're so concerned about ESG and social, why are you funding competing with people for their homes? I think that's the first way to do it. The other thing I've seen is housing associations fighting back. So housing groups are now putting in rules and regulations about who needs to live there. Now, again, as we know, given our stance, this is going to screw over the small landlords, right? This is going to screw over the guy who owns like 2 or 3 properties, which again, I don't think any of us feel like is an issue. It's just the fact that they have basically raped the savers and the retirees, given them no return on their money, and then taken that money, give 0 interest rate loans to financial companies to go out and compete with you. Like that whole structure is not anything like a free market. So I do feel like we need at least some temporary stopgap that, and again, it's always like, a double-edged sword. We know that that's happening, but somebody needs to stick up for the average America and the American dream and do it in a way that's either temporary or has some sort of guardrails around it, so it just doesn't turn into a total nightmare. But I think dragging the financial services companies and making it a big deal and having a big uproar about that could be very effective.
that is a reformed investment banker. I used to know a guy that used cliches like double-edged sword, but he would fuck them up all the time. So one time we're all in a meeting, he was our boss, and he'd be like, that's like a 2-headed sword.
I love that.
Oh, it's awful. We don't look at each other and go,
Love
what are you talking about?
I
There's
like a
floor
2-headed
legend.
sword.
The one guy yelled one time, he's yelling at somebody, he goes, it's not rocket surgery. So for the last 30 years, everyone would be like, listen, dude, it's not rocket surgery.
Oh my God. I'm going to put all these into rotation. This is amazing content.
Right?
This is why people tune into you guys, this level of amazing content. Forget all the rest of it. They got rocket surgery now that they
Rocket surgery. Okay, let's
amazing.
get to some real rocket surgery
Yeah.
here. So Bobby, okay, the last 2 times, I still think rates are going up, but I'm switching the trade this time because I was dealing in 10-year yields the last 2 times. And both times, right, not quite as right and quickly as I like to be, but both times rates have gone up a bit too. I'm switching the trade to the 2-year, and I have this one on too. I'm using the 2-year yield contract, the 2-year April micro yield contract. I bought it today at 2.76. My target on the trade is 2.98. The stop is placed below 2.59. For each one of the micros, that's $200 gain if it gets there and 170 loss. Now, the reason I switched to 2-year, which both of you guys probably figured out right away, is that based on what Powell said yesterday, and now the market's starting to price in 75 basis points. I actually forget about the 10-year for now I actually think the curve could maybe even invert again.
Yeah.
Now I think the 2-year moves higher. Carol, am I a dumbass or you like to trade?
I actually let and just for the caveat that I'm a long-term investor. So
this is a trade.
And this is a trade. But given that, just if I were to be a trader, I got a little trader in me, I think it makes sense because I've actually been following the spread a lot, obviously looking for inversion signals and whatnot for recession. And, the spread started to get a little bit wider, it was kind of up to a couple of days ago, it was like 40 basis points, which is the biggest it's been in quite some time, at least a month. I think it's off that, somewhat now, but I do think in terms of, the flashing signals in the market, that it's as good of a trade as I could think about.
Robert?
I like to trade. I like to trade a lot. You guys were talking about the Fed earlier, and I wanted to jump through the screen and jump in the middle of it because I feel like if you grew up in a neighborhood like I did, there were bullies that punched and bullies that didn't punch, right? And at the end of the day, you always had to figure out which ones they were. And Jerome Powell this week was coming across like the bully who didn't punch, like the guy who was saying, I'll do it. I swear to God, I'll do it. Bullard is the one who punches, right?
Right.
So he was out there saying, front loading, we're going to front load. And still nobody believed him. But what you saw, to Carol's point, was a dramatic flattening of the curve that happened over the last few days. On the 1st of April, the 2s10s was -6. Right. On the 18th, it was 39. That's where it settled. Now today it's 18. You go to the 5s, 30s, -12 on the 1st, +16 on the 18th, -3 today. So because you shifted to the 2-year, I love this. Through most of the day, I was adjusting all my rate markings during the course of the trading day. And I kept noticing 30 years not moving, 30 years not moving. It's only up a basis point. And you see movements from the beginning of a week of 12.79 basis points in the front of the curve. So I love this trade. I think it's a fast trade. I think you're going to make money in a couple of days as opposed to a week.
I hope so. I love making money, as you know. Let's move to crude oil and gas. Crude is shaping to this pennant. Crude is going sideways, which is amazing to me too, because just a month ago, we were talking about just wild headlines affecting crude oil and gasoline. First, I know you got a trade in RBOB gas. What's your take on crude? Is it breaking out of this pennant to the upside or the downside?
Okay, so I want to bring up something from episode 2 weeks ago. I had a gold trade. And last Friday, you asked me, you said the gold trade it was a long gold trade. You said gold trade probably hit its target. I told you it had not. It hit its target on the 18th. So the gold trade that I put on hit its total profit target, and that's out. I reversed myself on a profitable crude trade on a short, and I wanted to go long. And what I talked about last week, crude was about $106 and change when we were talking on the 14th. And I said I wanted to buy at 98.50, and I had somebody immediately send me a message when we released this podcast on Monday. No chance it gets down that low. It got to, it was 99.50. It got to 99.88. So I didn't get in that long trade. I'm scratching that one now. And to your point about this pennant, crude is tightening and tightening and tightening and tightening. And this is what crude does. I've been trading crude for as long as I've been trading most things. I worked at a physical oil company for 3 years doing strategy for them. One characteristic of crude oil is that it goes sideways and it tightens up and then trends like a bear after that. I mean, it just goes. That's because it's a pure supply and demand market. There has to be something that affects either supply or demand. And it's happening right now. If you go back to March 14th, the week of March 14th, to now, crude's only down 1%. Even though we've had all this volatility, net, if you do candlestick math and you look at your chart and you smush them all together, we're virtually unchanged. So that's why I'm switching to RBOB, because RBOB actually looks ready to break out. So all of this talk about gouging at the pump, oil companies don't own very many gas stations. Gas stations buy refined product in bulk. So just because crude oil fell from 130 to 106 doesn't mean the guy who bought the gas product when it was at 130 can all of a sudden cut his prices. He's got to get rid of the gas that he sold at that price. Okay. So now gasoline or oil's going sideways. I know I'm doing a long thing here, but I have more of a confidence of the breakout up for gasoline than I do for crude oil. So that's why I want to do the RBOB trade, which of course is the gasoline future. So what I'm looking to do is buy June RBOB. Actually, I already did, by the way, 3-spot 2775. So I bought it earlier today. I got to stop at about 3-spot 1875, which in RBOB is 900 ticks. Everybody else, it's a weird thing because it's 42,000 gallon contract. So it's 420 a tick, $4.20 a tick.
That's what Elon Musk gonna love.
I know, it's
420.
420.
Yeah, baby, plays it. Yeah.
The target
This
on
could,
that
this, by the way,
was-
this could be like a meme commodity trade. If it says it's 420 a tick, we got to let Reddit know about this.
What is the guy who has the electric car company's favorite contract? It's the gasoline contract, 420 a tick. Anyway, this is the June contract. The target is 3-spot 440. Now it's a big one for everybody that watches us. I'm risking basically $3,780 to make $7,035. I wish there was a micro on this. Maybe there will be someday. There's not yet. So it's a big trade. People may or may not be able to do that. It's per contract, by the way.
Can I ask a question?
Sure.
Yeah, hell yeah.
So again, since I sort of have a longer term view on this, and you're talking about the supply and demand and the oil, obviously the demand side has been significantly impaired by the human rights violations in China that are going on right now. What happens? I'm assuming at some point that ends and they get back to some level of normalcy. Do you think that then kind of changes things in crude, or is there something else at play long term?
Well, so that's part of why I want to be long the gasoline. Actually, what you just said, I think that China's demand is going to spike and spike quickly as it's been tamped down by the lockdowns they've had, as you mentioned, the human rights violations. And then also, does anyone think that all of a sudden Russia is going to come back into the fold, leave Ukraine to the point where we don't punish them? Generally, sanctions don't get rolled back overnight. And we can lose up to 6 million barrels a day of crude oil from them. Right now, they're underproducing by about 500,000 barrels. And what they are producing is going to China. So China's demand down. China's demand ramps back up. They come back to the global market. Right now, the gas stations are going through that supply that they bought at $117, $115. They go back out to the market, and crude oil spiked again. Now, we do have 26 consecutive weeks now of US rig counts either being up or flat. No drop in the last 26 weeks. But the supply from those rigs, it really has kind of happened already because, again, because of the regulations, the capital investment has not gone into shale. It's not going into energy independence. So the rigs that are coming online now are either going to spike in production or going to stay flat where they are. That's the difference with shale rigs. Most of the production comes out early. And then it just kind of tapers off and hovers at a low level. So the older rigs are not producing what they used to. So to your point, Carol, I think crude oil is probably going to spike higher. But even if it breaks down, the gasoline stations are still going through the old supply at the higher prices. So I think RBOB is going to hold in better than crude, at least in the short term.
Yeah, and also with the gas stations, obviously the component of the crude is only a piece of that. They have things like transportation, which is being affected by wages and other, pressures as well.
Bobby, can I weigh in on it real quick?
Please.
Here's the only thing I don't like about it is that we talked about that pennant crude and it seemed like it respected that upper slope. So the way I would do it is I like to be in long the RBOB. I would spread it against a smaller amount of being short crude, ratioed it to the RBOB. Does that make sense to you?
That actually can really work well in the short term. My worry with that is the RBOB trade not only looks fundamentally right to me, but it looks like a good technical setup. And while this is a pennant, the crude can break out either way simply by a shock. And I still believe the shock is going to be to the supply side, not to the demand side. So I'd be careful on how much ratio you do on that.
I like it. Let's move on to, we talked about commodities when Carol and I talked, and I have a silver trade. And as anyone who follows me on Twitter knows that the reason I did not put this trade on, and that's because I'm uncomfortably long silver already, and I have been for about a year. So I'm right now not adding to silver. But this is the trade I looked at today, and if I didn't have the position on, I would have taken this trade. And so the technical thesis is this: it traded back to about 24 bucks, which is great support in silver. I think it's a shot there for a long to buy it at 24.35, which is where I looked at it. This is the May contract, and target 25.40 on the upside. This is the micro contract, and stop out at 23.80 because it's a technical trade and 24 is the level. Now, the fundamental thesis, I guess, has to be one of two things. And Carol, Bobby and I always talk about, like, for the most part, I consider myself like 65 to 70% a technical analysis trader. And then I kind of like to fill it in with fundamental analysis. So after I see the chart, I have to figure out what makes some sense. So what makes sense is this peak Fed hawkish narrative? Could they be pivoting sometime soon? Or could the fact that everybody was bulled up on the whole commodity complex, the hit we've seen over the last couple of days, just been a position squaring thing, and perhaps it still belongs higher. We just had to wash out all the weak hands. Carol, what are your thoughts on silver? Do you have them?
So it's interesting. I spent a lot of time educating sort of the average Americans on financial issues and questions. And certainly a lot of people who aren't that sophisticated and aren't sort of day traders are looking at how to position their portfolios. And something that I've been talking about has been coming up a lot is making sure that you have a real physical sort of component of gold, silver, and other precious metals in your portfolio. And there are a couple of reasons. Obviously, if inflation continues, it's seen as a hedge against inflation. But also, the opposite side, if they stop inflation, you end up with a recession. It's sort of a hedge there as well. So it kind of works unless we get some weird threading the needle scenario. And we've obviously seen a lot of increases in terms of these companies that sell physical metals having huge demand. And I think that given the lack of confidence that people have in the government and all the things that they've gone through the last couple of years, and that we're going to continue to walk into weakness and people don't know what to do with money, I think that you're going to see more of the average person say, yes, I need to own this in my portfolio.
Bobby?
So I'm long gold, full disclosure, and I would probably have bought some silver were I not obnoxiously long gold as well.
Yeah.
I do like this trade. It's interesting, but I like it on the basis of I can't think of a reason to sell precious metals. Number one. Number two, it's holding in when it shouldn't. So the first thing I look at when I look at hard commodities is there any seasonality I need to be concerned with? And the last couple of weeks of April are fairly weak seasonally for gold and silver. Guess what happens in May? We get a strong seasonal tailwind. And for gold specifically, a lot of it has to do with Asian, East Asian countries going into wedding season. Gold is still an actual big deal as a gift during celebrations and weddings, and the physical demand goes through the roof. And those are the parts of the area, China, India, that still buy the most physical gold. But also, I can't find a fundamental reason. Is Russia, Ukraine going to flare down? I don't see that. It either stays stable or flares up. Is the Fed likely to end MMT and money printing forever? No, I don't see that happening. If they have success containing inflation, what does that success look like? 5%? 4.8%?
Right.
What does it look like? So I like this trade. Anytime you come with a long precious metal trade in the next month to 2 months, I don't think I'm going to dislike it. Something fundamental has to change. And the price action in silver looks good. I was looking for a place based on our models and the way that we trade at Path Trading Partners to try and do a silver trade today. I couldn't get the numbers right, but it doesn't mean the trade's not going to work. He held a gun to my head. I'm long silver.
So you just mentioned 5%. Is that a success? To put that in perspective, back when Nixon put on price controls, I think inflation was running at 6% and everyone was in a panic. And right now we're at a very, very lied about 8.5%. That's
17.
really 12%.
17.
Yeah, 17. How about that? Right. Yeah, it's amazing to me that it's such a contrived price index, the CPI. It's baffling and it's bullshit. Yeah.
Can I ask a conspiratorial question about gold?
I
since
love
you're focused?
conspiratorial questions.
Okay, so this is a conspiracy theory that's sort of floating around in certain circles, but kind of given the level of central bank debt that is out there, we know that they're all going to be looking to do something, and there are only so many things that they can do. And there are people who've kind of put out the thesis, smart people, intelligent, financially kind of people, that say if you look at all of the major central banks and some of the kind of minor central banks around the world, that they've all been stocking up on gold, as part of their reserves, and to some extent getting rid of some of the US dollars. And so there's a theory out there that instead of everyone writing down debt, which you can't do because there's obviously a counterparty to any debt that you issue, that because everybody has gold and you kind of give everyone this kind of runway to load up on gold, that they all come together and they write up the value of gold to compensate, on a sort of a reserve basis. Have you guys heard anything about this? What do you think of this? Is it totally wacky? Is that going to happen?
It's kind of a cousin of the $1 trillion coin, right? I mean, isn't it, Bobby? Yeah.
Yeah, I hit the cough button there for a second. I'm going to take it a step. I'm moving to a different lane on this. So we all saw as the troops are getting built up, we see it in hindsight really, but as the troops are getting built up on the border of Ukraine, Russia, it came out that Russia had been selling dollar-based assets, dollar-denominated assets, and stocking up on gold and to a certain degree cryptocurrencies, but I guess we can't really verify that. And when you saw what Canada did to the truckers in terms of just taking their money because it was an emergency, Canada had never had an emergency before. All of a sudden, a traffic jam was an emergency. But so they took the truckers' money. And then to see what the West was able to do with Russia's ability to transact. I'm not taking a side in the conflict, by the way, just factually stating what the West was able to do to Russia's ability to transact. How many, off the top of your head, how many non-Western friendly countries can you name? Right off the top of my head, I can say Venezuela, Cuba, Iran, Russia. Depending on who wins the next presidential election, maybe Canada and France and Germany. I don't know.
China.
Do we think they're going to stockpile gold, or do we think they're not going to stockpile gold? Considering what the West was able to do to Russia.
Right.
So I think that's another thing. We got long gold in July. It wasn't doing really well. But we said, inflation, this and that. And then that stuff happened. And I said, let's just get some more, hang on to it. I think it goes sort of side by side to what you were saying, Carol, from maybe a different road, but you end up at the same house, right? Where the value of gold goes higher simply as a hedge against Western power, maybe.
Right. The weaponization of the US dollar, the complete disrespect of the US dollar, not only at home, but abroad. All these kinds of issues that it becomes, obviously, if you go through and you study cycles and you study financial cycles, like we're sort of at what would logically be an end of a financial cycle, when we had Bretton Woods and we had going up the gold standard and all these kinds of things that, maybe it is, sort of a return to gold. I mean, certainly as good of a thesis as potentially could be out there.
So I'd like to rewind the tape, and when I'm giving my fundamental thesis, what you guys just said, how about that? That's my fundamental thesis for the trade. So that works better, right?
That works.
All right, should we wrap it up? It's Friday afternoon. It's time to go have a drink, it sounds like.
Is this hair care tips?
Hair care tips. It's Big Hair Friday, big hair, small hair. I joke that I have good hair, but I sometimes post that picture where I have a big afro. Do you know the one I'm talking about?
Yeah.
God, I miss those days. Now I can't. Like when you get a little older, it's like your scalp's too weak to even hold on to hair anymore. Bobby, you know even better than me.
Carol, when you go back and watch this podcast, watch the trade setup slide that Nader puts up. It'll be pictures of us with our good hair.
Excellent.
Damn straight.
But yeah, no, in terms of hair care tips, I can only tell you what to do with chest hair at this point. The rest I don't know.
All right. I'm going, guys. Thank you for joining us. It's not your Friday afternoon when you're seeing this, but this has been a ton of fun. Carol Roth, if you haven't bought the book, The War on Small Business, Carol, tell them where they can follow you on Twitter.
Only if you have a warped sense of humor. Otherwise, just don't stay off Twitter altogether. at Carol J.S. Roth.
Do you ever, when someone follows you new, if you happen to pop on it and you like today, someone, he had a big picture of Barack Obama and he had his pronouns, and I felt like sending a message saying, you're not
You're not
gonna
gonna last long.
Yeah.
That's always, yeah, that's always like,
right now.
but here's the thing, I will say, like, I get, because I'm like generally common sense, and I think people understand that I come from an area of authenticity and not just following talking points. Like, I have a large number of like progressive followers and like, kind of super lefty, and and also super righty, I consider myself like, more centrist. And, they're always like, well, I don't always agree, but like sometimes I learn something, or at least, so I do get kind of a weird, like, I look and I'm like, I'm not sure you're going to last. And then all of a sudden, like, it's a year later and you're still here. Like, wow, that's pretty crazy.
Awesome. Bobby, where can they follow you?
Bob_Iachino. And if you can't spell Iachino, I don't know what I can do for you.
Hell with you. Yeah, right. Enjoy your weekend, guys. It's been a ton of fun as always.